Bjorn is actually a former Razorback, so he's an alumni here. And he's a coach, he's a successful entrepreneur, he's an investor, and he's a catalyst for innovation. He specifically works with inclusive innovation, which he's done some talks on for us, and I've heard them, they're really great. He's probably pitched over 1,000 times, and he's raised a lot of money, like millions of dollars, working with VCs to invest and grow their businesses. Like I said earlier, he is a champion for inclusive innovation. And so keep that in the back of your mind always, right? That's important. But with that, today he's here specifically to talk to us about identifying and sizing your market. So I'm going to pass it off to Bjorn. Thank you for being here and take it away.
Awesome. Thank you so much, Stacy. As always, thank you for just all the great work you guys are doing at the Office of Innovation and Entrepreneurship, or Office of Entrepreneurship and Innovation. But it's so great to see what's happening there at the University of Arkansas. I say this all the time, that if I had this program when I was an undergrad, I'd probably be on my 3rd or 4th startup by now. But it's so great to see what's happening there. And I'm hearing raving reviews from the students, and I've just really enjoyed supporting you guys this semester, as well as connecting with students and other entrepreneurs in this space. And it's great that the University of Arkansas is really becoming a true destination for this. So super excited to be a part of this. Hi guys, I'm Bjorn Simmons. I'm an entrepreneur working on behalf of other entrepreneurs. As Stacy said, I'm a self-proclaimed venture catalyst. So I like really pushing innovation and pushing entrepreneurship to the next level. I'm also an ecosystem builder. So I go and work with cities and institutions and regions to make sure that they have the proper resources that they need to have a conducive and thriving entrepreneurial ecosystem. I started off as a startup founder in 2014 with my company Wiser. We were in a customer feedback space. We were building surveys that look and feel like games and last less than 60 seconds for corporations like Kroger and Walmart, Procter & Gamble. And we sold that company last year. And so since then, I've been in the VC space. I probably started my VC journey in Cincinnati, Ohio, as a venture catalyst and community director for inclusive innovation for a fund of funds called Centrifuge. And so we managed Startup Cincinnati and came back to Northwest Arkansas about 1.5 years ago to start doing some of this great work here. And so super excited to be here, super excited to be engaged with the university, super excited to be a resource for the other entrepreneurs in the region. So if you guys have been a part of my other workshops, you know that I am pretty down to earth. I would like to keep it casual because I want you to know the information, the practicum to a lot of theories that you hear in school or throughout your programs. And some of the stuff is, I would say, maybe outdated, but some of the stuff, especially things we're going to talk about today, are things I'm sure you learned or heard in your classroom that actually do apply. These things you should know. And so we're talking identifying and sizing your market. This is actually the fun opportunity. This is the fun part when you're building your business. This is when you're really focused on how much money am I going to make? Where are we going, right? This is the visioneering part of your business, because you get to identify really that true appetite for the business that you're creating and the solutions that you're creating. And you get to quantify that. You get to quantify, you get to understand your customers, you get to identify that. And so we're going to kind of walk through that process. So today's workshop is identifying size of your market, understanding product market fit and market opportunity. And feel free, guys, throughout the presentation to drop things in the chat. Stacey does a really good job of I hear you seeing your questions and sharing them with me. We can go as formal. I can present all the way through, or you guys can always ask questions as well throughout the presentation. So give me some feedback in the chat. Stay engaged. Drop your comments. Anything you want to talk about, we have room for that in today's discussion. All right. Cool. So on today's agenda, we're going to start off talking about product market fit. And I hope you guys, especially if you're as an entrepreneur in the entrepreneur program, have heard of product market fit. Mark Andreessen has really kind of coined this term, and this is where most VCs ask you for when they are looking to invest in your company. It's probably what's happened in business is that things that were applied in the startup world are now becoming mechanics of traditional business building. So things that you used to only to be seen or jargon that was used in Boulder and Silicon Valley in New York has now become general business development knowledge and jargon and things that we apply every day. So things like product market fit are theories, terms, words, practices that you guys should definitely understand. Second, we're going to talk market opportunity and what that looks like. Third, we'll look at the market strategy, how you develop that market strategy based on that market opportunity. We'll take a look at how competitor analysis plays a role in this, and then we have an open discussion so we can talk about either your personal use cases, some of the use cases that you really identify with or want to talk more about. So let's get started. All right. Product market fit. All right. So what does product market fit mean? Essentially, exactly what it says. My niche does this all the time. So product market fit is where the product meets the market and they both fit together. That's a simplified way of saying it. But product market fit means being in a good market with a product that satisfies the market. All right. And that's how Mark Andreessen has taught this and shares with. And a lot of VCs have knowledge that they push out, and I encourage you guys to follow it. A lot of practicum that I build or that I share throughout these workshops comes from knowledge from VCs I've either interacted with or worked with, or even VCs who invest in some companies that I've been a part of. And so VC knowledge is really important. I know a lot of people trying to raise money, but thinking about those venture capitalists are people focused on getting to some level of exit, some level of liquidation. So they want to IPO companies, they want to get companies sold, they want to get you to, optimal growth, right? So product market fit is a way to do that. Actually, it's the number one key to success, right? And if you look at the definition, and Mark Andreessen stresses finding a good market over a product. And most of the time, entrepreneurs do this inversely, right? They're looking for the best product, or they come up with a great idea and a great product that they can build, and they spend all this time building this product. Spend 12 to 36 months building the product, getting it done, trying to find a team, going through all these P's of a product, the people, and the processes to get this product done, and they haven't even assessed the market. They don't know if anybody wants it. They don't know if people are willing to pay for it, and they don't know if people are willing to use this thing. And so in building an effective or successful business, we want to prioritize market over product. And so this goes back to our problem solving thinking, right? And so what problems are out there that have a huge market and a base that's demanding a solution for that, and then build your products based on that. The most successful businesses are those that apply their product, people, and processes to the right market. And this is how that looks. In general, a market is going to be demand. People want this. They're looking for this solution. There's a problem that's out there. Pricing, they're willing to pay for it at a certain price level. At a certain price point, people are willing to give you money in exchange for their demand, and then they're willing to use it. Are people going to, do they want it? Will they pay for it? Will they use it? That's market, right? And so when you're beginning the process, identifying your market, what do people want? What are they willing to pay for? And are people using it? Are people willing to use it? And will they continue to use it over time? And then identify what product that is that meets that. Who are the people that can bring that to life? And then what's the processes? And the process goes all the way from how do you build your product all the way to how do you implement your product, right? How do you get your product to the customer and then do that over and over again, right? So that process from building a product, operationalizing your product, and then also getting that feedback back is the total package of the product. And those two things need to work interchangeably, right? So you need to have the demand, pricing, and usage meet the product, people, and processes. And that's product market fit. So again, champion market over product, because product market fit is the number one way to succeed. That's where you find scale. When you see that hockey stick approach on your projections, that's because you found product market suite, then product market fit. That's because your market is meeting your product over and over again. This cycle is happening at scale. Your company just starts to skyrocket. And so that, again, we want to find where the demand, pricing, and usage meets that product, the people, and the processes. And that's where you can find the most successful companies. Stacey, I can't see the chat, so you just have to let me know when somebody, has a question or anything.
You got it.
Awesome. So what does this look like? Where do we want to operate? We don't want to operate right here in the center of viability, desirability, and feasibility. All right. Viability, a confirmed business model that can make company real money. Will this make money? All right. Is there real demand for this? Are people willing to pay for it? Will they use it? Desirability, a large market of people who really need this problem solved. That again, demand, right? Are people, do they want this? Is there, this is a real problem that's out there, and not a silo problem. This is not something that could be only limited to that community, because then you're limiting the scale of your company. You really want to find those big problems and develop those big solutions that again you can automate almost and get and scale pretty quickly. And then feasibility, are you able to build a product and get it to the market? A product that you've been able to build properly that solves that problem. Right? Can you do that? When you have those three things operating effectively, that's when you found product market fit. So viability, desirability, feasibility. All right. Desire, do people want it? Viable, does it make money? All right, will they pay for it? Will they use it? And feasibility, can I build this and do it over and over again? Seems super simple, but is the most important application of your business. And when you found product market fit, that's when you start scaling your company. All right, product market fit, measuring product market fit. What does that look like? So on the quantitative side, here are some of those words I'm sure you hear in school. Quantitative versus qualitative. Those things are important, and you need to know the difference between the two. My company, Wiser, was a feedback company, so I had to learn market research in and out, right? And quantitative, and things that I can measure, qualitative, things that have intrinsic value, right? And so on the quantitative side, NPS score. Though I'm not the biggest fan of the NPS score, the Net Promoter Score, it's a metric that is adopted by the industry and in the market at large. And so, will customers recommend your business? And I'm sure many of you have done an NPS score if you're not familiar with it. But it's simply the question: would you recommend this product, service, or company on a scale of 1 to 10? And most companies want a 10, a 9 or a 10, because that means I'm willing to promote and recommend this product, service, or company to somebody else, right? And then anything lower than that, has its own variations, and being less likely to promote or recommend. But the NPS score, Net Promoter Score, simply solves, will your customers recommend it? It's because it's one thing to have satisfaction. There's another thing to recommend it. Some people can say, hey, I like this, but I wouldn't recommend it to anybody else. All right. And that's not, they're getting the kind of review, kind of company you really want to have. You really want to have a company or product that people, they love and they want to share it with their people in their network. So first, Net Promoter Score, will your customers recommend it? Second, churn rate. Are you losing customers? Right. And so, and this is where you're looking at month over month or week to week, however your conversion rates look, how often you're losing customers. And you really want to assess that and watch that. And these are the customers who may have tried your product, but then left it, they didn't repeat it, right? They didn't try, they didn't come back for a second time, right? They aren't demonstrating loyalty to your brand or your product, right? And so having a churn rate, understanding what the churn rate is really important, because it's showing that there is some level of quality or a demand that we need to meet, that's causing us to lose our customers. And so having a churn rate, understanding the churn rate is really important. Growth rate, are we getting and keeping customers, right? So churn rate and growth rate are different. Your growth rate is, are we actually acquiring customers? At what rate are we getting those customers? And then how are we keeping those customers? Are they coming back month over month, right? And whatever the sales cycle is for your product, your service. That's really important to measure, and you need to know both. You want to, oftentimes, entrepreneurs only focus on the growth rate. They're not paying attention to who's leaving. Understanding who's leaving and why they're leaving is very, very important, because that's how you are able to tweak and optimize the desire of your product, as well as the functionality and the feasibility of what you need to build into it. So often entrepreneurs want to be feature rich, especially in the software side, and having all these features, and then they understand, then they realize, hey, our customers who are actually paying for this and demanding this and using this don't want or need those features. And so watching the market over product is the first step to find a product market fit. And then lastly, market share. And, what piece of the market do you have, right? And measuring that, understanding where you're going, like, and we'll throughout the presentation, we'll talk about how you find market share and how do you measure that over time. But watching your customer participation, your market share compared to your competitors and compared to where you want to go, and matching that to your projections that you oftentimes establish early on in your business. Qualitative. All right. So quantitative, how we can measure, we can count the number. We can keep this in an Excel sheet, right? And measure this year over year. Qualitative is word of mouth. What are people saying about your company? Still, the number one advertising channel for most businesses is word of mouth. People are just talking. When people talk about your business, they share it on social media. They discuss it with their friends and family at dinner. That's the number one way that to promote businesses. And so you really want to understand that you can do this through surveys, right? The surveys and reviews, making sure that your company and your product, especially if it's customer facing, consumer facing, B2C, is listed on, sites like Google Reviews and Yelp, and always has a feedback loop, right? Your product life cycle does not end until you come back and you have feedback on it. So feedback is very, very important, and leveraging surveys to understand exactly what your product market fit is and how your product is meeting the desire of your customers is really, really important. So watch that. I always have surveys. And I know it seems tedious to build, and people don't like to, but there are a ton of tools out there now that make this more of a fun, fast, and easy process. And so I highly encourage you to always have a feedback loop. And oftentimes, especially when you're developing new ventures, entrepreneur support organizations encourage you to go out and get customer surveys and go do all this customer discovery work. Well, you still want to make sure you're doing that after you're in the market, right? And you're managing that and understanding what's happening with your customers. And then media. Are you earning media mentions, right? Often, most of the time, media mentions come when you're doing something extremely well or extremely bad. And right. And so if you're earning good media, that means your company that generally has a good reputation, or your products are actually meeting the demand of the environment. And so earning media mentions is really, really good. And it's great PR. You never want to be listed as a company that's doing a terrible job, because that can tank a media can make or break a business. And we see that time and time again in a ton of different industries. All right. More on product market fit, the 4 quadrants of product market fit. So the measurement, and I know you like, oh my God, graphs, more graphs. These things that you're learning in school actually apply to strategy. I'm a strategist, right? So I was a chief strategy officer for Wise, and I'm oftentimes play a strategy role when I'm working with other startups, especially as an investor and advisor, and even an ecosystem builder. I'm coming up with effective strategies that help ecosystems and startups grow. And so using processes to get to mastery is important, right? So often, in order to master something, you have to have the discipline to understand what processes you need to put in play in order to do this repeatedly. And so here are some of the things you need to do. Again, going back to things like this graph, the 4 quadrants of product market fit. You're going to measure this based on 2 things. On your x-axis, the depth of customer engagement. Are your customers engaging? Are they listening? Are they buying? Are they engaged with the product, right? And then the vision for your company. And this is definitely, especially when you're early on, I think some of the companies, people participating on this webinar are early on. But even from a vision to the growth of your company, where are you? And the vision for your company is how compelling it is versus unconvincing. There's a story of where you want to go, meet the desire of the market, right? And does that connect to how your customers are responding? That does your sales, your conversions demonstrate that you found product market fit, and that here's the story, here's why I built this company, and it's actually solving what I intended it to solve for, right? And so here, let's take a look at this. When they're doing this really well, you're gonna be in the top right corner, right? I have a compelling, my vision and execution of my company and my product is meeting and engaging my customers. We found product market fit. Congrats, you've done a great job. When you are high on your vision and your execution, yet your customers haven't found that level of engagement, right? It's kind of like echo chamber. You're speaking loud and it's just echoing through the walls. Nobody's picking it up and reverbing it back to you. That's a sexy story, and the investors understand that, and oftentimes they'll invest in that because they believe that it can get there, right? So they'll give you the resources that you need in order to make the tweaks that you need to meet the market, right? But that's a sexy story. But the recognition and fundraising prowess are not, substitute for product market fit. Is not having a sexy story and a great pitch deck and a great product that's not selling is not product market fit, right? Or even having a story saying this is the perfect product for this industry and they haven't bought it is not product market fit. The measurement of product market fit is going to be generated from, again, that are you getting customers? How are you losing customers? What they recommended and what piece of the market share that you have. And then down here, self-deception, where you don't want to be, is where you're not really telling your story well, and you also have and you're also not connecting with customers well. So pretty much, this is for people who just love to create products, right? They just pushing out products and putting them into the market, and they're just builders. They're hackers. They're builders, and they're, again, technology first companies. They push their products, pushing a ton of products out there and hoping they catch. And then so you have some companies who are high in demand by their customers, yet they are really pushing the product as well. So this is, they want to keep their revenues consistent. They're focused on it. They're not doing a ton of marketing. They have the customer base. They like to operate there, and that's actually a good business. At the end of the day, the companies that are making money are on the right side of this graph, right? They're making the most money. They're engaged with the customer. Customers are driving the market. The market is driving the product, and they have revenue, and they're generating revenue. But ideally, you want to be able to have that compelling story, and meeting the desire, and also making that good money so you can have proper product market fit. Customer engagement, meeting the vision of your company. And this is produced by Bessemer VC. All right, I'll pause there because we're getting ready to move on to the next part. Any questions, thoughts on product market fit? All right. Market opportunity. All right. I'm sure most of you guys have heard this before. Tam, Sam, and Sam. Those three triplets that find you in marketing and your marketing courses, and that you have to do all these Excel charts and these big bubbles to figure out what they really mean. And you're trying to figure out which one is Tom, which one was Sam, which one's Sat. This actually these theories are actually very applicable when you talk about identifying a market opportunity and size of your market. And so let's walk through them. TAM is your total available market, right? So that's the big picture, right? That's the big solution. That's everybody who's want this product, right? Who has this problem. Everybody who has this problem and the size of it. That's your total available market. 10 times out of 10, nobody takes over the total available market. Nobody. Competition, it will not allow that to happen. Sure, competition, anybody getting into the market will prevent anyone from having 100% total available market. So that's impossible. So you don't have to measure there, but you do want to know what the total available market is. This can be understanding a specific demographic, geographic region, really the people who have the problem that you're solving for. That's your total available market. You want that to be a big number, right? So you want that to be your biggest piece of the pie. Then you have your SAM, which is your serviceable available market. Who can we actually reach, right? Who's actually buying this, right? And then this is more when you talk about market share amongst myself and my competitors, right? And so that's saying who's being serviced, right? How much money is being actually spent in this area? Not potential money, because the TAM, total available market, is filled with a ton of potential, but your serviceable available market is mostly get generated from actually people paying and purchasing those products, right? And this is the sum of all the competitors in the market, including yourself. Then your serviceable attainable market is your projections. It's saying I'm going out to 2% of the total available market. And that's where you go, and that's what you're shooting for. That's with the operational plan that you have, the marketing strategy that you have. Your serviceable obtainable market is the area that you're playing in. That's your market share, and oftentimes your projected market share is where you want to go. And sometimes when you've been in the market for some time, it's exactly what you're servicing, and you're measuring it from present day market share. Right. And there's a number of different ways that you can do this. But oftentimes the top down approach is saying, I'm looking at the demographic of the people and how much they're spending and identifying that total available market. Then I'm looking at the players in that space who are already in the market, generate revenue. And that's a serviceable available market. Right. And this is people who are willing to purchase this now. Then your serviceable obtainable, meaning that you can obtain it yourself within your company, is the market share that you're going after. It's your market share and the market share that you want. We're being very realistic about it. So, and for example, WeWork's total, and this is also an image or graphic that should be on your pitch deck, right? In your business deck, overview summary, whatever you want to call it. But you want to have the slide that says, "Hey, we are thinking big for this company. We're not thinking small. This is a big market. Investors, you can make a ton of money. We plan for our company to make a ton of money. This is what that looks like." So here's WeWork's market opportunity. Is this what they presented? Actually, their actual presentation. WeWork was in a total available market of $1.35 trillion. So they were in $1 trillion market when they were solving for office space for small business and entrepreneurs, right? But then they said they then had a serviceable available market at about 168 billion. This is where they're in their competition was, right? So this looking at some other players who are offering office space in this region or in this area, and how much money they're currently making. And WeWork serviceable obtainable market was about $35.2 billion, right? And that's just 2.6% of the total available market. And that's oftentimes how our projections look. What percentage, and after you've identified what that TAM is, total available market, what percentage of that do you feel like you can obtain? And you want to trickle down all the way to your serviceable obtainable market. And oftentimes it's a very, very small percentage. We're talking about 1 to 5% most of the time, right? And oftentimes between 1 and 3. And yet, in your investors or even your stakeholders, they know when you have an unrealistic goal. So saying that you're going after 80% of the market share is likely unrealistic for a startup or early stage company to obtain in the first 3 to 5 years. And that's what the space is most of the time. And so you really want to understand what the total available market is, what that serviceable market is, who are the competitors in the space, how much money are they making, and then what piece of market share, which is your serviceable obtainable market, are you willing to obtain. And this can be really, really big numbers. You're talking about 2.6% of their industry was still $1 billion company, $35 billion company at that. All right. Sounds like somebody unmiked. You got a question?
Yes, I had a question. This is Ontario.
Okay.
Could we use this same concept and try to tie it into the problem that we want to solve? So, for example, I'm trying to put together a startup to solve light pollution, and I know light pollution affects 1/3 of the global population. So that could be my town, right? And then in my pitch deck, I could say, well, I'm not trying to service the global population, but maybe I just want to focus in America. And then to drill down even deeper, maybe I can focus on, I don't know, maybe the big cities that's in the south part of America to try to service that market first. So whenever I'm making a pitch to investors, I guess in that particular slide deck, I could frame it in that way.
Absolutely. Right. And so in your serviceable obtainable market, your SOM, that is based on your stakeholders. Who do you actually think you can reach? Right. What market strategy can you put together? Say, I can actually introduce this product and this company to the South of the United States. I might not be able to go globally yet, but I can get this product in front of the GEs of the world to really get some traction, some market share. All right. So your TAM, your total available market is going to be all the percentage of the population that's being affected by this, right? So X, 1/3 of the population is being affected by this. Then quantify it in numbers for your serviceable available market. So what are they spending their money on in this space, whether that's on lights or lights that are polluting the earth, or whatever that is, where are they spending their money in that space? So quantify that with a dollar amount. And then you say, we want to go after 3% of the population in order to encourage them to address this issue around light pollution, right? And quantify that. So give us that, what's 3% of that population, right? And then multiply that by how much you're spending in this space. And then that's that serviceable, obtainable market that you're going after. So we're going after 3% of the market. They're spending, can't do math that fast in my head, but whatever that may be, we're going after 3%, and this is $100 million marketplace. We're going after 3%. This will be a $3 million company in 3 years, right? And so that's really how you want to be able to talk to investors, right? And so they can see how you're going to get to that 3%, how much money that 3% is going to make, and is that in a viable, investable business. That makes sense.
Mm-hmm.
Perfect. Any more questions? Good question. All right, keep moving. All right, market strategy. All right, and this is another matrix that I'm sure you guys have done in marketing class before, but the Ansoff matrix does actually work when you're positioning your business. So market strategy. So this is a product market fit expansion grid, if you will, that was established by a mathematician and a business manager and published in the Harvard Business Review that has been adopted as an industry standard. Right. And so this is identifying how we're going to position our business as we go after this market. Right. So do we want to, and this is, and a lot of this is focused on growth, right? How do we grow in this space? Right. And we're measuring this based on a couple of things. Where you are in the marketplace. So are you in a new emerging market? Right. And so is this a new issue that's been found? If we think about the dot-com boom in the late 90s, right? When the internet became a household accessible resource, that expanded the market of Webflow, right? And so things like social media and apps and mobile applications, it created this whole new world where you have new markets emerging, and you can either advance existing products or you can launch your own products, new products, brand new products. All right. Of course, new products come with more risk, but sometimes they hit and they become the next Uber, right? Because you have found a new solution in an emerging market. And then you also have existing markets, like in a light space that I think Ontario shared, right? That's an existing market, but he's trying to identify a new product to launch there, right? And so it's going to be a high risk because you're trying to shift behavior, right? So you're going to be high focus on product development. Right. And but then once your product is adopted, you can start innovating with new products in an existing market to just penetrate and continue to grow. Right. So you might have one MVP solution. If we think about Uber again, Uber launched as, as a rideshare solution. Now you have Uber Eats and Uber last mile delivery. You have all kinds of new markets they've entered after they solidified or found that product market fit for their core solution. All right. So when you first get started, you really, really, really want to operate on the right side of this. That means you're going to have a high risk business, right? And especially in the startup space, oftentimes, I won't say you want to, but oftentimes startups are operating over here. They're creating products in newer existing markets, and they come with high risk, but with that high risk oftentimes comes high reward if they're able to change behavior. Other times, small business owners, the startup founders and small business owners are starting to come into community, right? Oftentimes, small business owners this is an existing market, this is existing products. I just have found an opportunity to do this really, really well in this market, whether I'm doing it in Northwest Arkansas, or I'm doing it in Central Arkansas now, but I found a way to penetrate this market with an existing product and in a market that's already existing. So this is like, a new barbershop or a new restaurant, right? And so this is saying that I'm not necessarily innovating. I don't have a high focus on product development. I am expanding to a new market and finding revenue there. And then you have market development. This is an exciting space too. So this is saying this product, I'm using existing products and markets that didn't know they needed it. For example, with my company, we were doing Wiser, we were doing surveys, right? Initially, we were going out to retail space. We were thinking that it was going to be the Krogers and the Walmarts. We're going to have surveys in the aisle, and people are going to be able to share their experience on their products right there at the point of sale. Well, our product really got adopted by the hospitality industry, saying, hey, we need surveys at the point of experience because we are measured by our success, and our funding from federal government is measured based on our satisfaction score. And so we need to know the satisfaction score all the time before we have to take our annual survey that reports back to the government. And so we had an existing product that expanded to a new market within hospitality in order to find product market fit there. All right. So these are the 4 spaces that you have to really think about when you're being strategic on where your product falls and where your company falls. Are we diversifying? Are we creating new businesses and new markets and pushing them out there and test and repeat, test and repeat? Or are we developing a solid product in an existing market to establish a new habit? Or are we introducing, existing products in existing market just to penetrate a space where we see opportunity? Or, lastly, are we developing new markets? Have we identified a product that's really well done that can be used and applied in different spaces and still make money? So you're gonna you can measure, assess your own risk factor, but Ansoff matrix does apply. I know that in theory it's taught like this on the left side, but I'm able to tell you how it works in the real world. So what that looks like, in a lot of times we strategize, and these are hypotheses, right? Apple, right? And Apple is if we build it, they will come. They launch new products in existing markets, and they are if you build it, they will come. The market is there, it's ready for us. Organizations like MIT, they are innovative. They're trying to apply existing products into new spaces. I mean, into existing spaces. They're trying to solve problems that have been there for a long time and introduce new solutions there, right? So they're trying to go. They're expanding rapidly. Of course, MIT is definitely known for introducing new things, but they spend a lot of time and research on solving problems that are already in the market, right? How do we fix what's already here using what we have? Google, of course, is just an engine for new market development. All right. And so they're always introducing or penetrating new markets with their solution, whether that's going into review space or, going from a search engine to, the number one provider of reviews in the hospitality and the restaurant world, or cloud-based services and resources for entrepreneurs. And Google just has matched that. They have a good hypothesis, no conclusions. Let's just push it out there. McKinsey, which is one of the largest and most well-known consulting firms, they're always finding new products, right? They're always finding new products and new spaces. And that's just the work that they do. You hire McKinsey to come and identify a new product in a new market and explore that. And if it works and it seems like it's something viable, we'll apply it back. But, a lot of consulting groups like McKinsey are oftentimes finding these new things. And what the major test of this is how validated is it, right? Are people actually buying this? How is the market right? Have people used it, or is this something untested that we're ideating about, and that can be built into the hypothesis of the company? All right, competitor analysis. Competitor analysis is really, really important. Well, let me pause. Any more questions about market strategy, Ansoff matrix, how it applies, any of this, market penetration, product development, market development, diversification? All right, these are jargon, but again, apply this strategically to your business, right? Where do you fit? What does your company fit? What are you doing, and how are you gonna maximize that? All right, I'll keep going. Competitor analysis. So your competitor analysis allows you to understand where your brand is, right? You want to know who you are and who your competitors are, right? And especially when you're talking to investors are trusting that investors will not become the experts in your industry, in your field, in the problem that you're trying to solve. They expect you to be. So in doing so, they expect you to know the competitors in the space. And so you should know the market and your competitors in and out, what they're doing, where they're going, however you need to figure that out, do it. But that comes with a lot of research. That comes with listening to your customers, a lot of surveys. That comes with watching what they do, paying attention to what's going on into the media, giving feedback back to your competitors, and then seeing how they engage, right? Go shopping, and all those things all apply, and understand who your competitors are. And then you want to be able to map that out, right? So you want to review your brand and your competitors, and how they relate to each other. List the key attributes of all of them. I work with startups all the time, entrepreneurs all the time. And they're like, I don't know how to do the competitor analysis. One, who are your competitors? Let's start there, right? Just list them out on a sheet. List them all out. And then list all the attributes. What do you like about them? What's out there about them? Go to their website, go to social media. What are they selling? What are they pushing? What does their marketing look like? right? What's your product offering? Then identify criteria and actually rank it based on how you value your company. Rank it, put a score beside it. Say they do this really well, they don't do this really well, and make sure you measure your own company so you can identify what we want to do really, really well, right? Nike's approach. Nike, we want to work with the best athletes. At the end of the day, we're going to market globally, and we're going to work with the best athletes. Everybody is going to be, get a second rate deal, if you will, in Nike's point of view. When it comes to working with the best athletes, world-class athletes, right? So they're on push that. So when they're ranking themselves against, the Reeboks and the others who now expanded, and they saw Nike strategy, and everybody's pitching for the next big sponsorship, if you will, or endorsement, right? But Nike jumped out front and said one thing that we're going to measure on is who we are associated with. And then once they saw their competitors coming into their market and saying, Reebok's getting good deals and Puma's getting big deals with, big name celebrities, they opened their platform, they open source their platform. You know what? Design your own Nikes. We'll manage the supply chain. Right. And so once they saw the competitors entering that space, they again did another competitor analysis to see where their competition was, listed the key attributes, ranked them, and decided where they wanted to go. And they decided to open source to where now, not only do they have world-class athletes they represent, but they also have open source and allow, the everyday consumer to create their own Nike. And it's been a brilliant strategy so far. So what does this look like? It's a fun exercise. I encourage you, entrepreneurs, have your strategy day, right? Where you do this work. And, have your CMO of the company. They should do this work and lead these sessions, and invite a consultant in to come and do it. And while you're in school as a student, work with the different department heads, right? And the professors that are there. Use your resources to say, hey, I'm working on my competitive analysis, and I want you to take a look. How do you feel about this, right? Are we positioning ourselves well? And you'll another graph, I know. Math is applied in the real world. But you want to have a graph like this to illustrate that. And here are the two basic variables that you can start off measuring. And this can be formulated how you need, but fundamentally, you want to measure quality and price, right? What kind of quality is high quality, low quality product, and how they price, right? And then place your competitors there and understand exactly where you want to play. Walmart, we all know Walmart. Walmart started off as more of a low price, lower quality company, but that's because they want a high volume. Right. And this is what it turns into. Right. So after you positioned it, this is what it turns into. You identify which quadrant you really want your business to play in. It gives you boundaries for your company. Right. So your company's not going all over the place. We do everything really well. That doesn't work. Right. You have to be strategic about where you're going, especially if you want to get to that 3% of your serviceable, obtainable market. You have to be very strategic on how you're going to get there. I mean, I've identified how we're going to get there. We're going to push that. Right. So we're going to offer a premium solution, meaning that's going to be a high price, high quality solution. This is a profit model, profit driven model. This is not a volume game. That means we are maximizing our profits here. Or we're going to be a skimming company like books, right? If you think about books, they want to have a very, very high launch. Even Hollywood now, blockbuster movies. Movies make the most money in the first 2 weeks. The first 3 to 4 weeks. Really, week 1 and week 2 are where movies make the most money. Same for books, right? There's the skimming industry, meaning that we have to launch big. So we have to put a ton of money into marketing, make sure everybody goes and get it, and it's going to have a high price. The quality may range along the spectrum, but we're going to push it out at a high price because we know that the price point is going to drop over time. Then you have the economy players, right? High manufacturers. Anything below the x-axis it's a volume game, meaning that we're playing the volume. That means we're maximizing on our efficiency in manufacturing supply chain. Right, it's an operational game. Economy, hey, we're recreating third-party iPhone chargers. All right, and we sell them to convenience stores. We have a price point. We make them really, really well. We make them very, very cheap, but they work. right? And so it's a manufacturing game. I have a solid supply chain. I'm maximizing my margins as best I can, but it's high volume. I need to get this product out as much as I can. Same for penetration strategy, meaning that I'm trying to penetrate this market. I'm on a launch a penetration strategy because I have a very high quality product, but the world really doesn't know about it yet. And so I want to get a ton of volume so that I can shift behavior. All right, which is why a lot of companies launch with freemium models, meaning that they offer their solution for free for trials, 90 days. I don't know, they may give you a whole year for free because they want people to use their product a lot. Canva is a good one, right? And a ton of others, even Amazon Web Services, when they started off, everything was free. Penetration. We're penetrating this market, right? So we need a lot of volume. And then once they realize it's a high quality product, we can add a premium to it to make more money, but we have the market share that we're going after. Market share strategy, margin strategy at the top. Market share strategy at the bottom, margin strategy at the top, right? And so you have to identify how you want to run your business, right? Are we going to maximize on profit? I have a high quality product. It costs a lot of money. We're the Gucci of this industry. All right, we have a premium offering, right? So you have to figure out how you maximize your premium and your profit model, right? Or do we have a low quality, low price product, right? I mean, we're maximizing on supply chain and manufacturing. We can build this for cheap, build it and sell it for cheap. So we need to get it out there. High volume, right? Penetration and skimming as well. But know where your company is, right? These are the kind of questions that investors do ask, right? Know where your company is, and it's very, very important when you're working with your sales team, working with your marketing team, how your company is marketed, right? How much money you spend on marketing, the kind of deals you want your salespeople going after. They need to understand exactly which quadrant that product falls into, and it's a spectrum, right? It can be all along the line, but you need to know pretty much for the most part which quadrant your company falls in. Questions? Also know where your competitors fall at, right? And how you differentiate yourselves from them, right? So if most of your competitors are premium products, right? Launch maybe the market driven solutions. Launch an economy product, all right? Figure out how you get that manufacturing and supply chain down and push the product down at a low cost, right? And see how it works, right? And these are things that you really consider when you develop a strategy and size your market opportunities. Again, market over product, right? Find the market, understand where you're going, and build towards that. All right. So we got, I think, 10 minutes left in our in our time. I'm gonna open it up for discussion. All right. We talked a lot. We talked about everything from product market fit, understanding yours, the TAM, the SAM, the SOM, positioning a market strategy, as well as a competitive analysis. These are the things that I would say that you need to do to have a solid fundamental market opportunity that you've identified and size appropriate for your company. So I'm gonna open it up. Any questions, comments, things you want to share, things you want to talk about?
Feel free to drop it in the chat or unmute your mic.
Hey, Bjorn, this is Devar. I had a quick question. Do you have any advice on how someone might go and create their own market? Because I know that that's a fairly difficult thing to do, but that's most likely what we would have to do in our strategy.
Give me a little bit more feedback on what you're doing.
Yeah, sure. So we've created a biotechnology company that takes bio waste material and converts it into bioproducts, specifically biochemicals. And so like today, something like plastic, for example, is created using petroleum-based chemicals. And we want to change that. We want to create these plastics out of renewable, sustainable waste material, bio-waste material. And one of the issues we're finding is that, you have like these large chemical companies like Eastman and Dow, making plastic from petroleum. And they would be open to being more sustainable and going green, so to speak. But they don't have the manufacturing capability. It would take a large capital cost to retrofit their existing factories or refineries to use our feedstock that we would supply them with. And that's kind of across the whole industry is people like the idea, but that kind of barrier is there. And so, yeah, so that's kind of where we're at, whereas we'd essentially either have to spend a butt ton more money building our own factories to use this feedstock, or convince one person to give us a shot and retrofit their factory to take our feedstock to produce these, for example, plastic.
Great. And I think that's really exciting. And so what you're trying to do is introduce a new behavior, right? And so what you want is for this industry, the green industry is here. You have people who are, have the green straws and, green materials now, but you're trying to introduce a new behavior in this space. And so I think you really want to look at, optimizing your manufacturing, your supply chain. Right. So you want to look at, I'm doing something that is, and you can let me know if it's more of a, lower quality or a high quality product as far as the end product from the bio waste that you're producing. But you're really going to have to price it lower because you're trying to shift the behavior. Right. And so you want your consumers, your customers to adopt this without having to churn. The reason why people leave a lot of businesses because they paying more. It's like, I don't want to pay that much. I'll try it the first time, but I don't want to consistently pay that much. So you want to kind of undercut the market, come with a cost efficient solution that can get high volume, right? You want a lot of people to adopt this as a new medium for how they engage in become committed to the green space, right? And so if you think about electric vehicles, right, electric cars, even though they came out at a premium now, in order to get more of a market share, the cost of electric cars is going way down, right? And so you have affordable models, right? If you think about Tesla introduced their sedan, their affordable sedan, so that they can get more penetration into the market. Now you see more people with Tesla, and Tesla's now the number one car brand because more people they've bought into the mission. It's an affordable solution. It actually does do good for the world. So it taps into their intrinsic values and is driving demand. So I think you want to operate somewhere along the line of being an economy or a penetration company, but you really want to go after volume as much as you can. So this is where I think you're looking at. You're really looking at new market, diversification, or market development, right? So diversification meaning that we're introducing a new market, a new product into a new market. So we want to diversify how you're spending now on applying these things and buying these things, as well as, or where you may be aware of these products, but we want to introduce them to a new market. So we want to develop this market space, but at the same time, you want to get a ton of volume so you can have this new behavior of using your products in your process to get into that product.
Gotcha. Okay, I see. So you want to convince them to change their behavior, whatever way that is. It might be a lower price point for the feedstock, or higher quality, or both.
Or both.
Yeah.
If you can do I think the best companies, honestly, are the high quality, low price point companies, right? Well, as far as I would say best, that's how you can scale on the volume side. You want to change behavior. That's a great way to do it. Introduce a high quality product and you want to be like closer to the line, right? But make sure your margins that you're making money. But oftentimes when you're introducing, and investors know this as well, when you're introducing a new behavior that could be adopted at scale, they'll give you a runway, right? They'll give you 2 years to get to that market, right? So, and you have to fundraise that way. Say, hey guys, we're gonna need about 2 years. This is a high volume game. We got to go out and just get as many customers and users as possible for this, right? So we need to introduce this at a low cost, even though we're going to continue to create this high quality product. But after that 2 year mark, when we'll have a break even point where we see a hockey stick and people are just buying this, the demand is overwhelming to our supply, and we can't even keep up with it.
Gotcha. Okay.
That makes sense?
Yeah, that makes sense.
All right, cool. And I'm happy to have a more in-depth conversation about it as well. That's my contact information.
Okay, cool, sweet. Thank you so much.
No problem.
How, when you were starting off with your ideas and products, like maybe with Wiser, or something like that. How did you remain unbiased as you began coming up with kind of identifying your own market and sizing?
Yeah, no, I think that's a great question, right? And so most people want to go after the sexy markets, right? So they want to be, at least for us with Wiser, right? We wanted to be in the Walmarts of the world. We wanted to go out to retail. We wanted to be integrated into, the Nike websites and integrated to all these websites. And we wanted to be on a retail first company because everybody knows retail and retail is being disrupted. We're like, this is the space we want to be. Well, we found that retail doesn't like to spend money on surveys, right? They don't like to spend money on, they spend money on the data aggregation, but they're used to very extensive reports. We were trying to create a fun, fast, and easy solution, right? So that means this, you can, of course, our dashboard is robust, but not as robust as you would get with some of the other market research firms that you're paying high dollar for. And so we were really trying to disrupt that space, but there was a limit to how much they were willing to pay. And we ended up finding more of a product market fit once we got into the hospitality industry because the price point was there, the demand was there, and then it was a industry-driven decision because they realized we need to measure our customer experience before we had to do our annual review, which appropriates how much funding we get from the federal government. And so that really took our company to the next level. Of course, we were getting deals in the retail space and it was working, but we found that, it wouldn't be a Walmart wants a Wiser. It would be a brand manager that wanted Wiser, right? So identifying exactly who the customer is, and the brand manager has limited budget and they want their data a certain type of way and they want to customize their survey. So we're spending a ton of time on a smaller price point when we could be spending less time and at a higher price point. And so we had just let the market show us where we needed to be with our company, as opposed to going after the sexy stuff.
Right. Awesome. Thank you. All right. Well, Bjorn and I are going to stay on for a few minutes if anyone has any other questions. Thank you, Bjorn, for being here. This was awesome, as always.
Awesome, guys. Thanks. I hope you guys enjoyed it.
Thank you.
No problem.